Hi, good evening students. The next topic we are discussing is the concept of the sales and the concept of the purchases. In the earlier videos, we have already discussed the basic concept of the sales and the concept of the purchases. Just a brief review. Purchases is anything what you are buying, any goods you are buying, and the purpose is that you will sell it. That is called as the purchases. So goods purchased for the reselling purpose is called the purchases. Sales is now those goods or the services when you are selling it to the customers by getting some profit, so that will be called the sales. It's not sure that sometimes there's a loss, sometimes there's a profit. So every time there's not a profit. So but whatsoever you are getting in the form of the revenue from the customers by selling the goods or services is called as the sales. Now, sales, we have two different options are available. The sale may be on the cash basis or it may be on the credit basis. Now, cash basis means that you are selling the goods, you are giving the service to someone, and immediately you are receiving the cash. So that cash basis sales. Otherwise, there is a possibility that you are selling the goods or you are giving the service, but it is on the credit. Credit means it's just like a loan. So you will not receive the amount immediately. It will generate your account receivable. Account receivable means it is a promise that you will get the amount after 5 days, after 10 days, after 20 days. It will depend on on the credit terms. We will discuss in detail later on what is the concept of the credit terms. So it is account receivables, or even in the business or in the accounting we use the word as the debtors. So it is a receivable or it is the debtors. So this is that if you are not getting the money, you are not getting the cash immediately, but you are getting the cash in the future. There is a promise that they will give the money after 5, 10, 15, 20 days, or maybe 1 month, or maybe in some of the cases like a 2 months, 3 months, 6 months. So that will be called as the sales, but is the sales on the credit basis. In the same way, we have a cash purchases, or it may be a credit purchases. Now, same like a sales, when you are buying the goods, you are paying the cash immediately. So, for example, you have purchased, like in the previous example, we have discussed that we are running a bookshop. So, you are purchasing the books. So, you are paying the cash immediately. Otherwise, you may promise them that you will pay after some time. It may be like a 10 days period, 20 days period, just like a sales. In the same way, you are buying the goods on the credit. So that is called as as the account payables. Okay, or it may be called as the creditors. So in the accounting term, it is called as the creditors or the account payable. Mean this money you have to pay, not now, but in the future you have to pay. So in the same way, in the sales, it is the money you have to receive, not now, in the future you have to receive. So these are basically related to the future transactions. It may be a credit sale or it may be a credit purchases. Now, the money that you are receiving immediately or the money you are paying immediately will be like a sales or cash purchases or cash sales. But if there is a promise that you will receive the money after 10 days, 20 days, 30 days, depending on the credit terms, or the money you will get after you have to pay after some time, it will be credit purchases or the payables will be there. All it depends on the credit term. It may be for the sales or it may be for the purchases. So here we will discuss some of the basic concept of the credit terms. I'll just give you one example of the credit term. like we have a credit term of 2, 10 and 40 for example. So what is the meaning of this thing? There are 4 items that are included here. First thing, 2, 10. 2, 10 means what? And then we have a n 40. This is what the 40 means, that is the maximum time for the payment or for the receipt. For example, you are selling the goods, you are giving these terms like the customer has to pay you within 40 days. That is the maximum time limit you have given, or the credit limit with respect to the days or the credit days you have given to the customer. So the customer will pay you maximum in the 40 days, but you're giving him or her an offer. What is that offer? That the discount period and this is discount percentage. If the customer will pay within the first 10 days after the sales, the customer will get a 2% of the discount. It is like a percent. Means the customer has to pay you maximum within the 40 days, but you are giving him an offer that if the customer will pay you within the 10 days, there will be what? 2% discount. Let's say, for example, customer has to pay, the sale is on the credit sales and it is for $100 is there. So the maximum time period like $100. If the customer is taking 40 days, within the 40 days, if the customer is paying, and the time period after 10 days, like 30 days, 20 days, 25 days, the customer has to pay $100. But if the customer thinks that he will pay in the first 10 days, so he or she has not to pay the $100, there will be a 2% discount, means the customer will pay you $98. So first 10 days he will pay you $98, but after 10 days till the maximum time period, that is the 40 days, so that will be $100. So we can say that from 1 to 10 days, if the customer will pay, customer will pay you $98 because the customer is availing the discount, the 2% discount. But from day 11 to day 40, the customer will pay you how much? That is the $100. So in that way, the credit terms works. The same thing can happen to the purchases. Instead of the customer, we just consider it as a supplier. So supplier has given you the offer that you have to pay within 40 days to the suppliers. So if you will pay from 11th day to 40th day, so you have to pay $100. But if the party as a buyer or as a purchaser, you are thinking that you might want to get some discount, so if you pay within the first 10 days, you don't have to pay $100, you have to pay only $98. So this is the concept of the credit terms. It can be any term like a 310, it can be 410, it can be 110, so it can be 115. So the number of days can change, the credit period can change, the percentage can change, the maximum time period can change. So it depends on the credit terms or how you are dealing with your customer, or how your customers are dealing with you, or it may be like how your suppliers are dealing with you. Now the second thing that is very important, the account receivable. So account receivable is what? That is the asset of the business. Means this money you are not receiving immediately in the form of the cash. So cash is also asset. But if you are not receiving that money immediately, you are getting some promise of 10 days, 20 days, 40 days. So that will be called as the asset of the business. So in the same way, if you are buying the goods and you are not paying immediately, so then it is what? It is the creditor or your payable. That will be called what? That is called as the liability of the business. Liability means what? That you have to pay. So that is the payable to the outsider by the business. So today we have discussed some of the basic things, that sales can be on 2 types. It can be a cash sales or it can be a credit sales. In In the same way, the purchases, two types. Cash purchases, you pay immediately, or maybe you pay in the future. So it can generate the receivables. If you are selling the goods, you have to receive the money in the future. So it is your debtors, and that is what? That is the asset of the business. Or if you are purchasing the goods, you pay immediately or you pay in the future. So that is the payable. So as a business, you have to pay, and this is called what? That is the creditor of the business, and the creditor of the business is what? Is the liability. And then we discussed about the credit terms of the business. I hope you have understood some of the basic concepts related to the sales on cash, credit, in the same way purchases on cash or on credit, and the credit terms. So still, if you have any doubt, if you have any question, so we can discuss in the next lectures. So you just comment it, or you can ask me in the comment section. Thank you very much.